boys, do I have a banger of a video coming for you guys here today? Oh my gosh, okay? Welcome into this video. I just found the next 2x fast stock, the next stock that I think has a huge opportunity to 2x or more in a very, very short amount of time. Every once in a while, I can find one of those opportunities in the market where it's just everything's aligning, the stock's beaten down, and it's poised to go on a big run in 2x or more very, very quickly, okay? Let me be clear, this stock we're talking about here today is a beaten down dog, okay? This stock is beaten down like it's nobody's business. Here today, listen to this. Here today, this stock was down 24%, okay? 24%. It was already somewhat of an intriguing stock. I was already starting to look into this one a bit recently. Haven't bought anything like that. Then I saw it here today, just before the market closed, down 24%. And I was like, oh, you got to be flipping my flapjacks, okay? Now, let's hope the chef doesn't go down 24% this week. They're reporting earnings in like 48 hours from now. Oh, man, okay? Or maybe we should hope for that. I don't know, maybe buy cheaper, load up on options. You never know, okay? The stock we're talking about here today is under a $2 billion market cap. Under a $2 billion market cap, and it is a beaten down dog. Now, you know me, as far as recently in the market, where are the opportunities in this market? Small caps, the smaller companies. That's where I see the biggest opportunities. Not that there's no opportunities in mid caps or large caps. It's just the best deals I'm finding out there in the stock market are small caps. In this stock here today that we're looking at, this is a prime example of a stock that's just beaten down. It's under a $2 billion market cap, and it looks like it is poised for a massive run. This stock we're talking about here today is $5, okay? Yes, a $5 bill. That's all it is. Who's on the $5 bill, by the way? Let me know in the comment section, okay? The $5 bill is what this one costs. I think the stock's going to $10 plus in actually a pretty short amount of time. So in this video here today, I want to get into two things. What stock is this, and why do I think the stock could 2x or more in a very short amount of time? I want to run through exactly why I think this stock is primed to go up 2x or more in a short amount of time. So hope you guys enjoy this video. As always, smash a like if you enjoy a video like this. I could do videos like this every once in a while on a stock that I think has 2x or more potential in a quick amount of time. Let me know if you enjoy videos like this. If I see enough support, maybe I'll do one of these in the future, okay? Also, if you're looking to download literally everything I possibly know about picking stocks, running portfolios, making money from stocks, things like that, download it all from my brain to your brain directly. Check out the pinned comment down there. That'll be to apply for the private stock group in the private Discord chat, okay? If you haven't got a chance to check out the Hungry Bowl yet, that's absolutely free. We're on iOS now and Android as well. And I'm having the team work on potentially, okay, keyword is potentially, adding SEC reports in there as well, which would put 10Ks, 10Qs, all that stuff right inside the app as well. You guys know we already have the feature where you can listen to conference calls right inside, right? Track your stocks, cryptos, newsletter, all that good stuff. But yeah, I'm looking to hopefully add SEC reports as well, okay? So the time has come to reveal the stock. What is it? 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 It is SDC, Smile Direct Club. This stock is $5.08 here today. It was down 24.18%. Absolutely devastating. Look at this stock since December. In December, it was $13 plus a share. And since then, it is down 60 to 70% in 9 months, guys. 9 months. I mean, my gosh. I mean, we've seen some vicious stocks over time, but that's one of the most vicious we've seen, right? When you go down 60, 70% 9 months, oh, that's painful there. Look at since this company went public, right? This company went public at $18 plus a share back in 2019, and it's just had a horrible time as a public company, okay? Maybe they went public at the wrong time. They were spending like crazy on advertising back then. They were just spending like nuts, okay? And they were losing a ton of money. They just went public at the wrong time, in my personal opinion, and it's just been a disastrous IPO. And you look at this stock here today, from where it went public, $18, $19 a share to $5 here today, okay? But the past is a past, and that's all it is the past, okay? If we look at this stock here today, it hit a 52-week low and one of the lowest prices the stock has ever been. Look at the volume today. Almost 39 million shares traded hands. Average volume's 5.8 million, okay? That's crazy. Under a $2 billion market cap, $1.96 billion market cap as of today. Pretty big short percentage on this one. Definitely not the craziest we've seen, okay? okay? But I can tell you the numbers are up there, right? Short percent as a percent of the float is 27.73% as of its latest numbers. The short percent of shares outstanding, 7.48%. So it's definitely a good percentage of shorts in the stock. How long they want to be in it, we'll have to see, okay? And by the way, if you never heard of this company, Smile Direct Club, essentially they're competing with Invisalign and braces, okay? That's like they're competing with a company and they're competing with a traditional model, okay? They make aligners to straighten out your teeth and get your smile right? Now, I've talked to a lot of dentists about this stock in the past when I did some research. Never bought this stock before, but I've always kind of been interested, kind of intrigued, and nowadays I'm super intrigued, let's just put it that way. But I talked to dentists about this, and some of those folks, especially in the private stock group, in the Discord chat and whatnot, some of those folks say you can't use Smile Direct Club's products for all situations, okay? If somebody's smile's really messed up or they got certain things, you still got to use the traditional braces, okay? Maybe you can even use a line, but traditional braces for some folks is still best. So just understand, like, not everybody with a smile that's not right can use essentially Smile Direct Club, okay? But when it comes to Smile Direct Club, here's the thing, okay? The pricing way undercuts traditional braces. So if you have a situation where you're looking at and you could use traditional braces, but you maybe don't want to, especially if you're an adult, right? You don't want the look of a traditional braces, but you want a better, smile and more straight and those sorts of things. Smile Direct Club's a great option for you, and it's far cheaper, right? Now, they just reported their most recent quarterly numbers. Look at this. I mean, you would have thought the stock would be up today. Look at the numbers, okay? Total revenue of 174 mil. That's an improvement of 62.7% over the prior year period. Net loss was an improvement of 41.6%. Adjusted EBITDA did decrease $2 million. That was the bad news. Diluted EPS was an improvement of 44%. So if you just look at those raw numbers, you would think, man, this is pretty impressive. Some huge improvements there, okay? Then if we look at what the chief financial officer said, he said the short-term headwinds from residual impacts of the April cyber attack, the company had to go through a cyber attack, okay? The lasting economic effects of Rona on our target demographic and slower scaling of some of the new international markets due to Rona prevented us from achieving our anticipated second quarter results. So it sounds like they missed numbers, right? Our planned overinvestment in marketing to relaunch in Germany and Spain later this year, combined with the continued execution of expanding customer acquisition channels, in particular the professional channel, should help us drive controlled and profitable growth consistent with our long-term targets, okay? So to me, it sounds like the long-term story is intact, but it definitely sounds like they're going through some short-term headwinds, right? They had the cyber attack, and then Rona still going on. And I'll be honest, I haven't had any dental work done or gone to a dentist since Rona started. I just think, I don't know, just something weird about, getting your mouth work done, or just even like, I don't know, it's just something about Rona. It's kind of turned off a lot of people from anything dental related in the short term, right? And so those are short-term headwinds, absolutely. While there's continues to be short-term headwinds associated with macroeconomic events and impacts associated with the cyber attack, Smile Direct Club's long-term revenue growth targets, as well as its opportunity to leverage its vertically integrated platform and unique, difficult to replace assets, remain unchanged. The focus continues to be to provide the best club member experience and to drive controlled and profitable growth. Profitable growth. That is a key line there, okay? Smile Direct Club remains the low-cost provider with brand presence, no pricing pressure, and no real competitor that provides an end-to-end vertically integrated platform for the consumer, okay? So as far as a long-term story, it definitely feels intact to me here, okay? For the year ended December 31, 2021, the company expects total revenue to be in the range of $750 to $800 million, okay? So they still expect some very nice growth year over year. And we're going to look more into the numbers in detail in just a moment here. Company also talks about how March 2021 was one of the best months ever for Smile Direct Club, and how the business can be very volatile quarter to quarter, month by month, okay? Now look at the numbers here in detail, right? So the company's now expecting a midpoint for 2021 is 775 mil. So that's under what analysts were expecting. So obviously that's a big disappointment, and that's a huge reason why the stock was down 24% today, right? But 775, if you run numbers on that, that's still around 18%-ish growth year over year in revenue. Still a pretty darn impressive number, right? And as far as next year goes, analysts expect them to grow around 24 to, let's say, 25% or so, maybe even more than that, right? But keep in mind, maybe the company doesn't do that. Maybe they have to bring down numbers, and maybe they only do 15% growth or 18% growth. But nonetheless, whether the company grows, let's say 12%, 18%, 20%, regardless, it's nice double-digit growth, okay? It's not like knock your socks off, this is the craziest growth company in the world, but it is very, very nice growth nonetheless. And especially when you are beaten down dog stock like this is, that's where the growth gets really intriguing. Look at how many analysts cover the stock. 8 to 9 analysts cover the stock. Last year, a company lost 71 cents, expected to lose 52 cents. I could see them potentially, keyword is potentially, doing a little better than that, right? Next year, a company is expected to lose 16 cents. Now, I mean, you think about this for a moment. The company is very, very focused on driving profitable growth moving out through here in the future, right? So think about the back half of this year, and especially going into 22, the company's going to be not just like, let's grow 30%, let's just spend crazy on marketing. I can see this company getting to a place where they're maybe even profitable next year. Not like a huge profit, but just a little profit, okay? And that would be massive. Now here today, everybody on Wall Street came out and downgraded the stock huge, right? Everybody. I mean, it was downgrades from holds to sells to everything, right? Just a really, really ugly situation for Smile Direct Club. And if you're wondering, how do you get a stock price to go down 24% in a day? Miss numbers, okay? Miss numbers, miss guidance, and then have every basically analyst that covers your stock come out and downgrade. And you'll see your stock go down 24% in a day, okay? That is rough, all right? Now, as far as me with buying the stock, I have to listen to this conference call first. I haven't got a chance to listen. I looked at some of the transcripts, I looked at all the information in the press release, stuff like that, but I gotta listen to that conference call before I buy. Rule number one for me is always listen to the conference call before I buy. You know Warren Buffett's number one rule, never lose money, never forget rule number one for rule number two, right? Mine is always listen to the conference call before you ever buy a stock. So I'm gonna have to listen to that conference call and make sure everything checks out there before I jump in this one myself, okay? Now, how does Smile Direct Club go from $5 to $10, and let's say in a pretty quick amount of time? I see two ways this stock does it, okay? Two ways. The option number one is a buyout, okay? This stock has gotten so darn cheap that I could see potentially Align Technologies buying them out and just saying, hey, this is an opportunity to buy one of our competitors. They compete in a different market, right? But it's still like they still compete, right? Obviously Align and Smile Direct Club, they compete differently, but they still compete. And so Align could look at this and say, man, this company's been having trouble. Why not go ahead and try to buy them out for, let's say, $3 billion, something like that. No, the other thing would be, would that deal be allowed to go through? That remains to be another subject. The other opportunity, I think, like a private equity company, a manufacturing company or something like that, could make sense here. Keep in mind, what is going to help this company be more and more profitable over time, right? One could be spending a little less on marketing. Two could be just manufacturing the product easier, cheaper, and better, right? And so a manufacturing company who maybe could even help them scale bigger and be more cost effective could potentially make sense, okay? Other options as far as buyouts, if we're thinking about that, I could see Procter & Gamble, I could see Johnson & Johnson. Both of those companies have plenty of money and could get this deal done like no problem for Procter & Gamble or Johnson & Johnson, right? And you think about Procter & Gamble, Johnson & Johnson, they don't like to necessarily start up their own brands. They like to buy a brand when it's already building out in the next potential multi-billion-dollar brand. Smile Direct Club's on its way to becoming a billion-dollar plus brand, right? You could obviously already say it's a billion-dollar plus company, right? And Procter & Gamble, Johnson & Johnson, what do they know a lot about? Advertising and marketing and cross-promotion, those sorts of things. And both those companies have plenty of products in the dental space, right? And this could be their highest end offering. So in my opinion, Procter & Gamble or Johnson & Johnson, I could definitely see one of those being interested in buying Smile Direct Club, right? Not just that, there's also the potential where they don't have to buy out a Smile Direct Club. When it comes to Procter & Gamble and Johnson & Johnson, it could actually be a deal potentially here where they buy an ownership stake in it. So maybe they give Smile Direct Club $200 million, $300 million, $400 million, get a percentage of the company, a good chunk, 10%, 20%, something like that, and basically give Smile Direct Club that cash, which would be a sweet big cash infusion where the company could have then, obviously expand this business bigger and bigger. Now, it is not a must. Let's be very clear. It is not a must that Smile Direct Club gets a big, huge cash infusion from a Procter & Gamble, Johnson & Johnson. anything like that. If you look at their latest numbers they just released yesterday, you know, $376 million in cash. Accounts receivable at $214 million. So it's not like the company's hurting for cash. And then if you look at the current portion of long-term debt, is $10 million. So this is not a company that's like, oh man, they're on the brink of bankruptcy or something like that, right? I mean, if they had, you know, $76 million in cash, I'd be like, oh man, this is you're getting a little dicey, right? But $376 mil for a company like this with only $10 million of current portion of long-term debt, they're definitely not in the type of situation where they need a huge cash infusion. I could just see it being a help, and I could see it being potentially a partnership between somebody like a J&J or a P&G. If I was P&G or J&J, I would look into this ASAP. Let's put it that way, okay? That's option one on how this stock can 2x plus fast. The option number two is this, okay? The company needs to set realistic growth numbers. I would say even, I don't want to say sandbag numbers a little bit, but just set realistic. They don't need to put up some crazy numbers. Their stock is a beaten down dog. All they need to do, set realistic growth numbers. Hey, we think we're going to grow 12% next year, 14%, 16%. If it's even a question about 20% plus, put a lower number out there, 12, 14, 16, something like that, okay? Set realistic growth numbers. Meet those numbers or beat those numbers. There's nothing Wall Street hates more than you come in and you miss your numbers big time, right? And you missed your guidance. And that's what this company's got caught up into, and that's why the stock has gone down 60 to 70% in a matter of just, what, 9 months? Because they're missing numbers. Wall Street hates that, okay? Set realistic numbers that the company know they can hit, meet those numbers, beat those numbers, maybe eke out a very, very small profit in 22. They don't have to make bank. They don't have to make, a couple $100 million net income, nothing like that. Just a small profit in 22 would go a mile and a half for this company, because the whole argument's been they did nothing but losing money, and it's just a money-losing company. If all of a sudden they can change that perception in 22 and just start maybe having a little profitable quarters here and there, the mindset completely shifts around the stock, and it would 2x extremely quickly, especially if they're consistently hitting their numbers or beating their numbers. This stock would be ready to fly up to 2x plus in like a snap of a fingers, okay? And so in my personal opinion, when it comes to SDC, Smile Direct Club, I can see the stock 2xing or more in the next 12 to 24 months. Yes, in a very, very short amount of time, I see the stock 2xing or more, okay? Now, also, once again, I got to listen to that conference call, but I'm very interested if this stock is under $6 when next month, when 2024 calls come out. I can tell you I'm going to be absolutely extremely interested in potentially buying 2024 call options in SDC. Maybe buying something around a $7.50 strike, maybe even buying something around a $10 strike, dare I say, okay? So I'm going to be super, super interested in those. Hope you guys enjoyed a video like this. As always, let me know in the comment section if you enjoy a video like this. Also, if you don't mind, smash that like button. That helps out huge in the YouTube algorithm. I appreciate you guys for being here as always. If you want to download everything I possibly know about picking stocks, running portfolios, making money from stocks, things like that, check out the private stock group. That will be the pinned comment down there. That will be to apply for our private stock group and the private Discord chat. Thank you for watching and have a great day.